apparently Goldman had come out and said CTAs were max long. They were at the 100th percentile. And, I think $28 billion worth of equities were bought in, in July and August. And they keep ramping up. And I know we've said in the past that if we get bad earnings, that's going to be the trigger. But do you think we can roll along, everybody smiling happy, whistling past the graveyard?
Well, I sent them something to you, I guess, about 8 days ago. I had researched whether or not there was more or less money on the sidelines. Do you remember that?
No, I don't.
And we were talking about leverage and whether or not
Right,
maximum leverage is deployed.
right,
And the research said, yeah, we're over levered.
right,
Certainly in historical standards, we're leveraged. And that's consistent with what you're saying. Um, I don't know how they distinguish between long positions and short positions because they're basically looking at net margin and they both take margin. So maybe they have a way to do that. I don't know. Um, but if the hedge funds, you say they're net long, I would say they're net invested, whether or not they're invested in puts or calls or outright cash positions. We used to look at short interest as an indicator, but the options
right.
market's long blown that away. You know, I mean, I worked for a company that basically shorted stock with calls as protection and wrote puts just to generate cash to invest because interest rates, Japanese CD rates were at 18 or 19%. It was like stealing money because through the options markets by shorting stocks, we were generating cash at 3, 4% and reinvesting it. Now, computers have driven that game away. It's available to everybody now. So I'm sure that these put call premiums are sort of consistent with probabilities now. They weren't back then. I'm talking about 40 years ago.
Hmm.
But still, the idea of short interest was blown away with that. So when I see a statistic like that, I think you got to drill down, but it's consistent with the research I've done in terms of money on the sidelines and whether or not. So I guess I would have to agree that this market is overinvested.
Yep.
And what I was looking for, what I've been looking for, is signs like you get really good news and the market doesn't rally because they're already net long.
Right. No new buyers.
Yeah,
Yeah.
I don't know if I've ever done it for the podcast, but I used to give a lecture about liquidity, and maybe it's worth doing now. If you can imagine, kind of like one of Einstein's thought experiments, if you can imagine a really unrealistic scenario where we create a market and everybody in the market has the exact same risk reward parameters, and we put a bubble over that market. So I get short to you at 45, and I got a 2 point risk. So I got a stop loss at 46, and you're long at 44, and you got a 2 point risk scenario, and you're going to take a 2 point profit. So we would go from 44 to 46, and I'm short, and I've reached my pain limit, so I'm trying to get out at 46, and you're happy to get me out because you're taking your profit. But there's a bubble over this room, and some synergy occurs, and the people outside the room, what we'll call the investors, as opposed to the traders, drill a hole at the top of the bubble and take that liquidity from you at say 45 and a half or 46. They get there before me. So the liquidity is mixing up in the room inside the bubble, and I'm short to you at 46. And when I come to get out, you're already out. The investors took you out, and that liquidity is not coming back. So that's when we reach a new technical level. That's a technical breakout. So the technical liquidity mix in the room has shifted and moved up a notch. And that's what's been going on. There's been a lot of investment money as opposed to trading money in this market. That's what makes it, I think, so hard to determine. There's so
Well,
many
I
Money,
think that's the answer with gold. The central banks are taking that liquidity out of the market, and that's why gold keeps going in
yeah,
one direction.
probably.